Well, it's been quite a start to 2026 here as we are getting a bit deeper into the month of February. And very interesting is, of course, the divergence in performance in terms of the equity market and certainly also what's playing on the commodity markets. The easiest way to look at it, in my view, is by looking at this chart here. And if you've been following us here at thestudytrader.com, you know that this not only has been one of our major themes for the past 6 to 12 months plus, but it certainly is a major theme for us here in 2026. We call it the Great Rotation, or at least it's part of the Great Rotation. Bunch of squiggly lines here, really only two of them matter. The very bottom one is the technology sector. You can see the 3-month performance, so looking back the past 3 months, tech stocks in the United States, the XLK ETF representing the S&P 500 tech sector, down almost 6% on the 3-month look back. And if you look at the upper right hand corner, you can see XLE and XLB. Those are the energy sector stocks and the material stocks respectively. So that are up 22-23%. So you're looking at a spread of the high 20s between these two sectors. And of course, you know where everyone's allocated. Almost no one's allocated in materials or certainly not energy. Everyone is in tech. So that tells you a little bit where things are. And there's a lot more pain to come here before people make a change. But that's what's going on. Year to date, we can look at the same numbers year to date. So basically between beginning of January and now, the spread is equally crazy. You can see XLE energy stocks up 18%, materials up 14-15%, and again, tech down 4%. So a huge spread in performance. Now, I'll give you one more thing, and I think this is probably a chart that a lot of people will ultimately come to start watching very closely. At least I hope so. This is the ratio chart. So we take one asset divided by another. We're taking the NASDAQ 100, the QQQ ETF. We're dividing it by the SPY ETF. And what you're getting is this ratio chart. And you can see that this is a weekly chart. So each one of these bars is 1 week worth of price action. You can see that we're starting to break down out of a wedge pattern that has been developing for years, really, at this point, if you look at it correctly. Now, again, I'm always a little bit weary of, there's no linearity here, meaning just because we're breaking now doesn't mean it's going to collapse, but the relative underperformance of tech that I just showed you in the previous, those squiggly lines, is visible here through a clean ratio chart. I fully believe this is going to accelerate to the downside. Again, probably not a straight line, but something that I do think is going to weigh as large global portfolio allocators are rebalancing their portfolio out of the dramatic overweight that they had in the NASDAQ 100. Hope it helps, and we'll see you again in the next video.